Hi, I'm John Dickson, a tax manager with Henssler Financial. Family members who have saved to a 529 plan are preparing to make withdrawals now that college students are just a few weeks away from the upcoming semester. As you may know, a 529 plan allows you to save money tax-free for qualified higher education expenses. These include tuition, fees, supplies, computers, and books or software related to coursework, as well as room and board if carrying at least half the normal full-time class load. Funds in the account may be used at any eligible higher education institution, including in-state or out-of-state private or public colleges or universities, such as Kennesaw State, University of Georgia, and the University of Tennessee. Go Vols! Graduate or postgraduate schools, community colleges, certain trade or vocational schools, and many colleges or universities abroad may also be eligible. You can search for the federal school code on the FAFSA website to determine if a school is eligible. Most 529 plans have withdrawal forms available on their websites. Generally, you will need to include the type of withdrawal, which investment option you want to take the funds from, and who should receive the funds. Each year that withdrawals are made, you or the plan's beneficiary should receive a Form 1099-Q that shows you the total distributions for the year. If your total adjusted education costs are more than or equal to your withdrawal, nothing needs to be reported on your tax return. If you withdraw more than your qualified expenses, some or all the earnings reported on the Form 1099-Q must be included as income on your 1040. You may also have to pay a 10% penalty for withdrawing funds for non-education expenses. As a CPA, I highly recommend keeping your receipts, invoices, and other documents to substantiate all your transactions, including your qualified higher education expenses. If you are audited, you want to have all these records. When you are preparing for your 529 plan withdrawals, you should consider working with a CPA to maximize your tax benefit from your 529 distribution and any potential education credits. You cannot apply a tax credit to expenses that were paid from 529 plan funds. If you qualify for the education credits, your total qualified education expenses will be reduced, so you may need to withdraw less from your 529 plan to avoid penalties and taxes. Likewise, if your student is fortunate enough to have received scholarship money, the scholarship could be taxable. A CPA will be able to determine how you should apply scholarships, tax credits, and 529 plan withdrawals for you to minimize any liability and maximize your tax benefit. If you'd like help coordinating 529 plan withdrawals with scholarships, loans, or tax credits, you can reach us many ways, including the Henssler app, available in both iTunes App Store and on Google Play. We're on Facebook, Twitter, and LinkedIn. You can also reach us at 770-429-9166 and at henssler.com. I'm John Dickson, and thanks for watching.